Okay. Good morning. My name is Jim Spencer. I'm the Executive Director of the Bluefield, West Virginia Economic Development Authority. And today we're privileged to have my good friend, Harold Patterson. We've worked together for several years on business planning, training, other aspects, and is a great partner to us here at BEDA. He is a business coach with the West Virginia Small Business Development Center. By the way, this is part one. This session goes for about an hour and a half. There'll be a part two on March the 2nd from 2:30 to 4 p.m. Your business plan is very important. I don't care if you're an existing business or a startup, your plan is your guide. And some of you, if not all, have enrolled in the My Own Business Institute program, which we call MyBluefield Entrepreneurs Bootcamp, and they teach business planning. That's one of the modules that you've taken. Today is to sort of fill in some gaps that may exist with that. And so Harold has graciously agreed to teach the class. He'll be available for questions and also by email for all of us if you want. But your business plan is very important for two reasons. Number one, if you're in the Food Truck Incubator Program, you need a business plan when you get to use the truck for the 10 events or 60 days. Then you'll do a business plan at the end, which incorporates your pro forma and other things like that in case you want to get public financing from a bank or microloan or investors. So your plan is very important. It is your plan and you need to put a lot of time and effort and thought with it. We'll help you, but it needs to be your unique plan for based on your situation. So without further ado, I'm gonna turn it over to Harold, and thank you, Harold, for being with us again. And again, if you haven't registered for the 102 session, please do so. This will be recorded. So if you'd like to use it again, you can. Faith will be sending out that link. But anything we can do to help you at any time, please don't hesitate to reach out. Thank you.
Thank you, Jim. And thank everybody for being here today. I am Harold Patterson, like you said, and I work with the West Virginia Small Business Development Centers. My office is based in Bluefield, West Virginia. I cover 4 to 6 counties, depending on what the workload is. And I've been doing this since about 1999. So it's been a while. Today, we're going to explore some of the basics of business planning. Jim is trying to get everybody situated with the food truck, get their business plans ready, get them going, and we're going to see what we can do to help you. If there's any questions online, just go ahead and put them in the chat, and I'll stop and try to answer the question as best I can. Here's today's staff, myself, Jim, and his assistant Faith Blackwell, who we couldn't put this on without her, trust me. And here is the Moby part that Jim was talking about. If you wanted to log on to Moby, if you're not registered in that class, you can find it at mybluefield.org. I think it's under the resources page, isn't it? Good deal. Under the resources page. I highly recommend going through the course. I've looked at it, I've explored it quite a bit, and it is very thorough in what it does. There's about 15 different sessions. Each session will take you somewhere between 30 and 45 minutes to go through, and it'll give you an in-depth look in that amount of time as to what each section is looking for. I highly recommend it if you're putting together a business plan. And again, these are some of the classes. These are the classes that are listed in Jim's section. That's the ones that he wants you to take in order to get a certificate. He didn't mention it, but he's talking about having some sort of a graduation pretty soon. It would be a nice thing if you guys could get through that, graduate, and come to the graduation. Okay, let's get started. Business planning. What can impact your business success? There's been a lot of studies and a lot of surveys and a lot of people talking to business owners who succeeded and failed. And these are the top 10 things that they've come up with. Look at number 1, lack of planning. A lot of times people come in and they have a lot of hopes and a lot of dreams, and they say, I can build the best worm box that you've ever seen for a fisherman. It's going to be diamond studded. It's going to be great. but who really wants a diamond studded worm box? They just want something functional. So you really didn't do your planning. I've had people come in and tell me that they were the greatest cooks in the world. I know a lot of you are in the food truck business, but have you tested your idea? Have you tested your food on other people? Not just your friends and family who are going to give you probably pretty good feedback, on strangers who are going to tell you the truth. Okay, you've got to do your planning. You've got to do your research, because the number one reason why businesses do not succeed is the lack of planning. You can see the other ones: poor credit. You've got to have some decent credit to actually get in business, because in a startup situation, as far as salary is concerned, a lot of times you don't make a lot of money in the very beginning to support your home life. And that's very important. So you got to have pretty good credit. You got to have some resources, personal resources as well as business resources. Lack of support. Does your family support you? Do you have enough support that if mom and dad need to go to the doctor's appointment, do you have somebody to step in and take them to the doctor's appointment while you run your business? It's very important to keep your doors open, to keep the trucks moving once you get into business, once you get that thing opened up. Lack of experience can be overcome with training. Lack of experience can be overcome just by having a good team, which we're going to talk about later. And have people to suggest things, people to talk to you through the bad times. Poor management skills, again, your team is going to be very important in that situation to help you overcome whatever management skills you lack. Not enough money goes back to the planning in a lot of situations. You didn't plan properly in the beginning. A lot of people have said, I can get in for the bare minimum as far as my business and getting it opened. What you don't look at is what I don't expect. What happens if I only plan to have 10 customers a day, but all of a sudden I've got 30 customers a day? And as far as your food truck is concerned, I didn't plan for that amount of money to be spent every day. Therefore, I probably don't have enough supplies. I probably don't have enough product to serve them. So we'll look at the money situation also. Failure to seek outside help. And that goes to how willing are you to say, hey, I really need help, because there's people out there who won't do that. They're too proud. They just, I can do this on my own. I can shoulder this on my own. Ignoring what the customer says. Be careful in this situation, because when the customer says, you need to have this on your menu, or you need to have this on the shelf, or you need to provide this, you have to weigh that against your bottom line to make sure that you can afford to do those types of things. If in a convenience store situation, somebody says, man, you really need to provide this soda. It's the greatest soda in the world. It's a ginger ale, it's a this or it's a that, and you go out and you buy a whole case of it. And there's only 2 or 3 sold, where you're stuck with 20 of those cans sitting in your shelf. That's your profit setting there. If somebody says that they like this certain type of food, and you go out and you buy all the ingredients, and it's a non-seller, very little of it gets sold, then all those ingredients are going to have to be used in something else in order for you to get your profit back. So be careful when the customer tells you these things, but you can't ignore them either. If you start getting a suggestion from many different customers, then that's something you probably should heed. And poor cash flow management. Can't tell you the situations I've had where people get into business and you always get a rush of people because they're going to check you out to see what type of store you have, what type of restaurant you have. They'll flood in there for the first month or so. You may end up with a pile of cash after the first month that you weren't expecting. And a lot of people say, hey, I can go out and spend it on this or that. I can take a vacation. I've even had people do that. And in the end, the money dried up and they could have used it. They could have used the money that they spent on frivolous things. So anyway, those are just some of the things about business success. Some of the primary things that we're going to be talking about today is the name and description of the business, targeted market and customers, trends in the industry, value proposition, and the vision. Going to try to explain how different those are. The founder background, work experience, and that thing, and your team and your goals, maybe for the next class, but we're going to get to as far today as we possibly can. Okay, when choosing a name, remember this: easy to pronounce, easy to remember. Unusual spellings can really mess you up sometimes. Keep it simple. You can be unique in the way you do your name. You can be kind of descriptive in what you do. Sometimes you want to tell people that you're a pool supply company, or that you're this type of restaurant, or you're this type of department store. You want to separate yourself sometimes. You want to avoid using your name, because if you want to sell the business later on, your name travels with that business. So you may want to think twice about Jane Smith's taco stand or taco truck, because Jane Smith is going to go with that taco truck when it gets sold. As far as being unforgettable, if you can use your name, and I've told you, try to avoid using your name. If you can use your name in a unique way, if your name is such that it fits in with the business and can carry on without you, then that's the way you should use your name in that situation. We had one client that was doing event planning, and their name fit right in there because it was beyond events. I can't remember now. Do you remember what it was? Go Forth and Be Merry. That's what it was. It was Go Forth and Be Merry. The person's name was Go Forth, and I apologize if you're watching this. It was Go Forth and Be Merry. That would fit right in. That would work with the business name, and it would follow even if she decided that she wanted to sell that business later on. Okay. Any questions from the local guys here that if you want to ask me a question, just go ahead and do it. If not, we'll go on. Okay, describing your business. And we're taking this really from the executive summary part. I'm trying to expand on it just a little bit beyond what the executive summary would say. Really, in the executive summary part, we should be as descriptive as we can in just a very few sentences. When you get to the meat of the business plan, that's when you start expounding on these things. But right now, as far as describing your business, you need to have the business name, your physical location, and the hours of operation. You'd be surprised how many times people do not think of those things. Who's the legal owners? Does John Smith own a sole proprietorship, an LLC, a sub-S corporation? Is it registered in the state of West Virginia, the state of Virginia? Where's it registered at? What are the products? What are the services that you're going to be selling? Are you selling restaurant food of some sort? Are you providing a service of some sort? That needs to be sort of explained in your description also. Is it a new business? Is it a startup? Is it an expansion of your business, of a business rather? Is it a seasonal type thing? There are a lot of people who only operate in the summertime. There's a lot of people who only operate at Christmas time. You could basically describe your growth opportunities based on your research, back to your research. What's the potential of the area for food trucks? How many are there here now? How many visitors are coming in from Hatfields and McCoys? How many working people need a fast, quick lunch that you could provide? So what are the growth opportunities that you can see? The last thing I kind of threw in, and you don't really see this in the Moby stuff, the NAICS code and the description. The federal government has placed a code for every business. If it's a food truck, I can go to the NAICS website, type in restaurants or food trucks or whatever, the keyword, and it'll give me numbers, and it'll also give me a description that they've come up with to fit your business. So you could actually use that also in helping describe the business. If you need the NAICS codes, and you will when you do register your business, that's where I come into play a lot of times. People call me up and I'll look them up for them. Okay, what are the trends of the industry? What I'm going to say now is some of the lending institutions want to see this because it shows that you've done your research. It shows that you understand your industry and you know what's happening in that industry. I had a gentleman call me about a certain business that he's been in for about a year and a half, 2 years the other day, and he wanted to expand. And when I started pulling up the industry information on him, his industry had taken a dip as far as the national economy is concerned. It had gone down 2%, and the trend was even further down, even though if you looked at some of the news articles said there were shortages in that industry and that they needed thousands upon thousands of workers in that industry. So what do we make from that? There is potential, I guess, in people who are training the people to get into that industry. But as far as making money in that industry right now, it's a downward trend. So you have to be kind of careful when you look at those types of things. That's where I come in. That's where your banker comes in. That's where your team comes in, which we'll talk about in a little bit. So some people want to see this. Some people want a blurb about it. And some people don't want it at all. It depends on the company you're going to get financing. Okay, now we get into the hard stuff that I always get a bunch of questions about. Value proposition. When we're looking at a value proposition, think about the customer. Think about what your business is going to bring to the customer. What specific benefits that you're going to promise and that you're going to deliver on. Okay, and I gave you some examples. Everybody knows Uber, the smartest way to get around. What benefit, ask yourself, what benefit does that bring to you? The smartest way to get around. Taxis are known for taking you the long way so they can get more money. Uber says they're the smartest way to get around, which means they're going from point to point and get you there fast or smart. Apple, the experience is the product. Everybody's got an iPhone. Even my 80-some-year-old parents have iPhones. They sit there all day long just flipping on Facebook, and the experience is the product. It brings you, that's the benefit it's going to bring you, is all the different experiences that you have on the iPhone. Something that it kind of struck me there was Less Accounting. It's a software, it's an online software company. Bookkeeping without the hassle. Isn't that what we all want? Because very few of us understand accounting. So bookkeeping without the hassle, that's going to catch your attention. That's going to say, wait a minute, I need to explore this company just a little bit more because I don't want the hassle of doing bookkeeping. So if they can make it easy for me, let's see what they got to say. So when you're thinking about a value proposition, again, think about the customer, think about the benefit that your company brings to the customer. No questions? Okay, the vision. This is about the company. This is about explaining your company to the public, to the world. The BBC, the British Broadcasting Corporation, to be the most creative organization in the world. There's a lot of descriptives here in a vision proposition. There's a lot of, here's what I want to be to the world, or here's where I want to be positioned in the industry. It could be a lot of to make people happy. That's Disney's vision. They want to make people happy. Do they do that? And then a more expanded one, I went with Amazon there. Our vision is to be the Earth's most customer-centric company. Can we agree that they're pretty close? Where customers can find and discover anything they might want to buy online. That's their vision statement. That's where they want their company to be. You have to decide where you want your company to fit inside your industry or your place in the world. Most of the time in a local situation, we want to be the best food truck in the city of Bluefield. We want to be the best food truck in Southern West Virginia. We want to be the best deli food truck in an area. Use a little descriptive in there. Is there any, give me some ideas, guys, about businesses that you've come across here in the last little bit. What do you want to do? Yeah. Say it again. Natural juices and smoothies. Okay, if we were doing a vision statement for you, you want to be the most delicious, most nutritious drink in Bluefield, Mercer County, Southwest or Southern West Virginia, Southwest Virginia. Can you see how you're describing your company to the public and where the position that you want to be in? Okay. So that's the difference between the vision is about the company, the value proposition is about the customer, the benefit you bring the customer. Can you see the difference? Okay. Goals for the business. And basically they're going to fall into about these 4 categories. When you're setting your goals and you're for the business, and we all have to do that, usually we have goals and objectives. You'll have a goal that you want to have 60 customers a month. And then your objectives are going to say, here's how I'm going to achieve that goal. Okay. I'm going to take my food truck and I'm going to go to this industrial park, or I'm going to take my food truck and I'm going to go to this complex. I'm going to visit this fair. I'm going to do these type things in order to get me 60 customers a month. So it has specific numbers. It usually has date ranges in it. By the first year, I want to have 90% customer satisfaction surveys. So your goals are specific. They have numbers. They have timelines. Financial gain. We can do that through your financial projections. But here's where you tell them, at the end of the first year, I want my food truck to have gross sales of $200,000. These are just things that you are striving to get to in order to make yourself a success. Once you achieve that goal, guess what? Goal's going to change because now you got to go even higher. You got to make sure that you're going further and you're growing at a rate that's going to cause you to have financial gain. Employee development, you may want your employees trained. You may want them to have different types of health packages. You may want them to have different types of continuing education, not necessarily in your business. You may want them to actually get an education and go on to something of their dreams, their hopes. So most of your company goals fall into those 4 different categories. Any questions on goals? Okay, in the next session, we're actually going to come back to this because I've got a sort of a spreadsheet that we're going to insert after today's lecture, and we're going to talk about it next time. But when we start looking at financing and the financial projections for the company, the first thing, especially in a startup situation, that you need to look at is what's your startup checklist, your capital and your expenses. And the worksheet that I have breaks that down into individual categories. They're going to send that to you today in a handout. You can look at it, but we'll come back and talk about it next time that we get together. You really need to concentrate on how much money do I need in order to get my business started up. I told you before, one of the reasons why businesses fail is lack of capital. This is where you decide how much capital do I need, how much can I afford to borrow, how much can I afford out of my own resources to put into the business, because you still need money to live on. So most of the people start with expenses first, because that's where you're going to decide how much money you need to borrow. And they'll go through all those lists of expenses and they'll add it up and say, okay, I need $100,000 in order to do this project. I have $10,000, which is a good number, 10%, to put into the whole project. And I'm going to go borrow $90,000. And then when we look at the capital side, we're going to say, okay, I can get $90,000 from institution A, institution B, institution C. That could be a bank. That could be a county economic development authority. It could be a combination of those two. So once we decide what our expenses are and what we need to borrow, then we can decide where to go to get the money. Accounting statements. They're going to want to see, the bank's going to want to see, or any program that you go to, they're going to want to see a cash flow, a profit and loss statement, and balance sheets. We help you put those together. SBDC will help you put those together. We have templates that we use once we've talked to you, once we know what your expenses are, once we know what your projected income is going to be for the year, the month, the week, whatever. We can plug those numbers in and see if it cash flows. And a cash flow is nothing more than money coming into a business at the beginning or during the month, and expenses coming out as we pay our bills. And our bills could range from employee salaries, your salary, the tax requirements that the government puts on us for those, and everything from taking out the garbage to buying other inventory to sell. So we'll take a look at all of that. Your profit and loss statement is very similar to the cash flow. There's a few differences. I can discuss those with you when I meet you. But basically, it follows your cash from the beginning point in time. Usually we start the month that you open, and we flow through every month. At the end of the month, if you've got money left over, we bring it to the top of the month and start over. So we watch those things come through. That's the cash flow, I'm sorry. We watch that come through on the cash flow. On the profit and loss statement, it's basically just individual months. We look at the month of January, the month of February, the month of March, all the way out to December. And then we decide at the end of the month if you have any money left over, and then we add that up. Again, there are a few differences. We can go through those when we meet and talk about them. And then the balance sheet. The balance sheet really is a look at your business at any point in time. The balance sheet changes from day to day, actually. But when you go for a loan, if you're a startup situation, they want to see the balance sheet at the beginning. What's it going to look like day one? If you are expanding your business and the bank says, okay, I need a balance sheet, it takes into consideration the assets versus the liabilities at that point in time. And we help you put those together. Cost analysis, basically, we're just going to explain why we assumed all the different things in the cash flow and the profit and loss statement. We're going to put together a series of notes as to why we thought that you're going to be able to see 100 different people in a week's time, that your electrical costs are going to be X number of dollars based on what AEP has told us. We can go through and put all those types of things based on our research into those notes to justify our numbers back up there in all those statements. The break-even analysis, after we have plugged all those numbers in and we've decided what our fixed expenses, what our other operational expenses are, we have formulas that we can plug in to say that you need to sell 25 tacos a day in order to break even, or you need to sell 50 t-shirts a day in order to break even. Ever how much business that you need to do to break even during a given period of time, we can plug those numbers in and find out what your break even point is. That way you can say, well, today I sold $750 worth of material. I only needed $450 to survive, to break even. That's pay myself, pay all the bills. So I'm over my break-even point. And whatever internal controls that you might come up with, a lot of people don't think about these things. Check signing policies. Who signs your checks? Is it going to be you? Are you going to turn that over to a secretary? Are you going to turn that over to your accountant? Who's signing your checks? Little suggestion, I wouldn't let nobody sign my checks but me, but that's just me. Strategy for controlling shrinkage. Does everybody know what shrinkage is? You're seeing it on the internet where people rush into your store, grab all your stuff and rush back out. It's called stealing. So what controls do you have to keep not only customers, but sometimes employees? Walmart, biggest department store in the world. They have, and they project every year, a percentage of shrinkage basically from their employees. Comes in the back, goes back out the back, never hits the shelves. And they know it, so they calculate for it. Control of incoming merchandise and supplies. A lot of times people have been using Square, the accounting system with when you check out, they swipe your cards and other stuff like that. Square also has, and there's other software that has this too. They keep track of your inventory and they let you know when it's time to restock. They let you know when it's time to reorder different things. So it'll help you control your incoming merchandise and your supplies. Any questions on this? Again, a bookkeeper, an accountant, us, an SBDC coach, we can help you with all of these things. And a lot of people are glad to hear that. Okay, next thing, and again, we're going to come back to this because I'm going to show you, I may show you a couple different templates that we have. I'll definitely show you the startup checklist for capital and expenses to help you get started, because that's really where everybody starts. But I may try to come in here and show you some cash flows and profit and loss statements. Yeah, Square. I'll get together. I'll get together and I'll get it to Faith. Square, SQUARE, I think. They have the capability to help you control your inventory. Most software, most point of sale software now has that capability. And that's what you're looking for, is a point of sale software, because you can put your starting inventory in, and when you do the swipe, the checkout on the barcode, it'll tell the computer that that's been sold, subtract 1. And then when you go look at your inventory, it'll come back and it'll tell you, okay, you only have 20 of these left. It's time to reorder, because you'll set those numbers also. You'll set the limits that if it gets down this low, time to reorder. You can set that to do automatically, or you can do it manually, which starting out, I would do it manually, because you're watching your money when you're starting out. So you just don't want something coming in unexpectedly. But I'll get together a list of 2 or 3 things. I had the SBA send me a really good software that I'm looking at, and I'll get it to Faith, and she can get a listing for everybody. Okay, we're not going to hit this one hard. We will if there are questions. Okay. But when you start thinking about the organization of the business, generally what you guys fall into is either an S corporation, a limited liability corporation, or a sole proprietorship. Okay. There is a handout which Faith is going to send you guys, explaining in some detail the differences between these types of incorporations. If you need to speak to me about what's best for you, we can sit and talk, and we'll make suggestions. Also, the West Virginia Secretary of State website has a little 5-minute program that you can answer questions, and it'll give you a certain percentage as to which company you need to register as. I can also have Faith send that out also. We've talked about that in other workshops. But very briefly, a sole proprietorship is you. Cannot separate you from the business. All the assets of the business are yours. All the liabilities of the business are yours. As far as your taxes are concerned, once you filled out your paperwork for income and expenses for the business, it goes right straight onto your 1040. And you are responsible for any taxes that need to be paid or any refunds that the company's going to get. Again, cannot separate you from the business, which means, and I said, all the liabilities are yours. Something happens, God forbid, salmonella breaks out or E. coli breaks out the way it did at Chipotle, and people start suing you. They're suing you. They're suing your home. They're suing your bank account. They're suing your retirement fund. They're suing your kids' college fund. Now, you can get insurance to try to alleviate some of that. And if you're going to be a sole proprietor, I highly suggest you do get insurance for whatever liabilities you could incur. But remember, in the end, if the award is greater than the insurance, you are responsible for anything above what the insurance pays out. I'm not trying to scare you. I'm just trying to give you the facts. Okay. So if you're going to do business as a sole proprietor, that's fine. It's a good way of doing business. A lot of people do it. But always remember, the assets are yours. If you're making a ton of money, you're going to be taxed, on that money from the federal government and state government, but it's not a double tax. It's a sole proprietor tax, a single tax. You are responsible for all of your Social Security and Medicare and things like that. You're paying both the company and the employee's part. So you kind of double tax there a little bit, but you get everything. It's all yours. All the assets are yours. All the liabilities are yours. If you want to sell a sole proprietorship, you sell the assets. Okay. You sell the equipment, you sell whatever. You can't sell the company because you are the company. If I started a sole proprietor, it would be Harold Patterson doing business as Patterson's Adventures. Okay. I am the company. I can't sell me. Therefore, I sell the assets, the equipment, things like that of the company. If I died and my family basically inherited the company, what they're inheriting is the assets of the company, the equipment and things like that. They're not inheriting the company. The company's dead. So they can go on doing business. They just have to register in a different name and keep doing it. So a sole proprietorship ends. Okay, any questions on that? Just put them in the chat. The next question, the biggest one I get is for limited liability. Let me explain it this way. A limited liability company sort of came about because a lot of accountants and doctors and lawyers and people like that were in a partnership. And a partnership is just a bunch of sole proprietors doing business. They own a certain percentage of the business. They have a certain percentage of the assets, a certain percentage of the liabilities. They have working agreements as to what partner is doing what inside the company. Now, it's a real rough, brief overview. But any liability, anytime doctors got sued, anytime lawyers got sued or whatever, they had to come up with their percentage of the award because they own a certain percentage of the company. And they kind of got tired of that. So they decided to create this hybrid company, this hybrid limited liability down here 30, 35 years ago, 40 years ago. And basically it combined partnerships, sole proprietorships, and corporations, just kind of combined them and gave specific rules. You're still partners kind of in the company. And you can even be a single member inside an LLC and own it all. You can choose to be taxed as a sole proprietor or as partnership rather, based on your percentage ownership. You can choose to be taxed that way, and it just goes straight on after you fill out the paperwork, just goes straight over on your 1040. If you choose to be taxed like that, or inside the corporation, inside the limited liability company, you can choose to tax like a corporation, which means you would be an employee inside the company and would be taxed accordingly. The company would have responsibility for your Social Security, your Medicare, it's parts of what it needs to pay to the federal government. And you're a employee of that, so the company would actually get a tax break for your salary. That's all for your accountants to sort of figure out. The biggest thing that you're worried about is liabilities. And there is some liability protection in here that you don't get in these two. In other words, that same E. coli thing breaks out and you get sued. They're suing Harold Patterson Food Truck LLC. They're not suing Harold Patterson doing business as Food Truck sole proprietor or Harold Patterson and Associates Food Truck Partnership. Okay. They're going to sue the company. They're going to sue the LLC. So you do get some liability protections underneath. If it's drawn up properly, you do get some liability protections inside the company there. There are certain ways that you have to put together the limited liability company. You need operating agreements between everybody that's involved. You're going to need articles of organization registered with the Secretary of State. And there is a portal here. I got it down at the bottom, business4westvirginia.gov, that you can actually register any of these if you want to, if you feel comfortable with that. But you do need those articles of organization, and you do need to register with the Secretary of State. You do need a FEIN number from the IRS, and we've gone over this in other workshops. And you've also going to need the NAICS code that I told you about before, and you need to make sure that you're registered with the Tax and Revenue Department, the state of West Virginia. Okay.
We had someone ask the question, if the company belongs to you, then how are you not liable for any damages, illness, etc.?
Personal liability. They would actually, according to what we've been told, they would actually have to prove that you intentionally meant to harm somebody in order to break the corporate veil. There's a veil between you personally and the corporation you. Okay, the corporation has a life of itself. It's a legal entity in the state of West Virginia. So it has the right to be sued. It has the right to go out and make commerce, but it has the right to be sued also. By you owning the company doesn't mean your personal gets sued. Again, they have to break that corporate veil between you, the person, and you, the business owner. Technically, they are suing you, the business owner, but they're not suing you, the sole proprietor, the person, the single person. Does that answer it? They okay with that? Okay. And that's, yes, ma'am. Her question is, if you start out as a sole proprietor, can you change to an LLC? The answer is yes. You can change one time. You can always go up. If you started out as a sole proprietor and you decided that you wanted to switch to either LLC or an S corporation, then yes, you can do that. My suggestion is, though, if you're going to change, do it when your tax year starts. Most people tax year starts January 1st. So if I'm gonna be a sole proprietor, say for 2022, and I'm really thinking about I want to be an LLC, I want to do it January 1st of 2023. Your accountants will thank you for that. Because if you decide in the middle of the year to switch, then half the year you're going to be a sole proprietor, half the year you're going to be either an LLC or a sub S. And it's a little bit more accounting work for that person. So yes, you can do that. A lot of times though, if you're a sole proprietor, it's easier to just do away with the sole proprietorship. Just inform the state of West Virginia that you're going to go out of business on December 31st. I'm gonna go out of business. And what they're gonna do is they're gonna check to make sure all your state taxes and stuff are paid, all the sales tax, workers' comp, if you owe that, all the different state taxes that you would pay. If they're paid, they'll give you their blessing. As far as your suppliers and all that, it's up to you to settle up with them. But if you're going to switch to an LLC on January 1st, and that's where I was going with that, just end the sole proprietorship, open up the LLC, brand new, then, you know, your suppliers will come along with you. Okay. If you're switching from an LLC to a sub S, that's a little different. And what you would do then is just inform the state that you're going to switch from an LLC to a sub S. They're going to tell all the different agencies there that are involved of your switch. especially tax and revenue. Okay. And on this date, instead of being an LLC, you're going to be a sub S corporation, an S corporation rather. So a little bit different in that situation. And even sometimes it's so complicated and there's various things going on. Sometimes they will actually just end an LLC and open up as a sub S. It depends on the company. It depends on what their books look like. A lot of things like that. No, an LLC has to have, she wanted to know if you had to change the name of the business when you made the switch. Technically, no, you could keep the business name. Now, remember, when you're a sole proprietorship, you're a DBA. It's your name doing business as the name of the company that you choose. Okay. When you actually form an LLC or an S corporation, the name of the company is the entity that's doing the business. Okay. So you could use that name that you chose for the sole proprietorship. You could use it down here if it's not been taken. Okay, so you can continue on with the name. But an LLC has to have LLC in the name. That's one of the requirements.
A quick question. So for folks who you said they have to have LLC in the name. So like signage, marketing materials, social media, would that have to have LLC in it?
It's supposed to, but they can get away without it. Especially like on signage and things like that. Business cards, letterhead, things like that. Yeah, put it on there. But on like a sign, if somebody's going to put a sign up in front of the store, neon sign, you don't have to have the LLC on there. You could just have the trade name up there because people are looking for you. On the major legal stuff, yeah, you got to have the LLC. Also with an LLC, you have to designate when you're doing the incorporation that the LLC is for a certain period of time, or you can make the LLC indefinite, perpetual. Okay. So they'll ask you that question and you have to decide, do I want this LLC to end after 10 years or so, whatever date you choose, or do I want it to be perpetual? So just, that's one of the differences. Okay, as far as an S corporation is concerned, very good way of doing business, been around forever. You can be a single member S corporation. You can be a multi-member S corporation. In a multi-member S corporation, there has to be some stock. There has to be some certificates of stock that are given to the owners, and the stock will add up to 100%. There has to be articles of incorporation filed with the Secretary of State. Two of the things both these things have in common is you have to have annual meetings for both of them, and you have to file paperwork with the Secretary of State. It's going to cost you $25 or $50 to file the paperwork. But basically what it is the annual meeting, you sit down with whoever is the majority stockholders of the company. It's a public meeting. You post it at this date, at this time, at this place. We're going to have our annual meeting. You're going to open, you're going to close, you're going to have minutes read from the previous year and approved. You're going to have a new business, unfinished business, and you're going to close. Even if it's you, even if it's a single person inside that company, you're going to have those things. And it needs to be in your records. The filing that you have to do with the Secretary of State's office basically updates the contact information from all the majority owners. Or if you have multi owners, it'll be the executive board that you have to update. But anyway, you're updating their personal information with the Secretary of State's office. If you do not do that, they will suspend your license. And I've helped a lot of companies get their license back. Okay, so you want to make sure every year before July 1st that you file your paperwork with the Secretary of State's office for your annual meeting and update all of your stuff. If you have any questions, give me a call. See what's next. I'm froze. I'm froze. Yeah, let's cut it here. Let's cut it here. We're going to stop right here on this part of the slides. Are you going to send the slides out to everybody? She'll send the slides out. If you want to take a look at the ones that are following, we'll finish this up next time. But let me just say this. A lot of this stuff sounds repetitive, but it's not. That's what I'm here to do. I'm here to help you get through all this stuff. You're not alone. I've gone through this kind of quick today. I've tried to show you some of the major highlights of what we got so far. And what I want to do is help you build the best business plan. You build the best business plan because you need to know about your company. I don't. I can write it. I honestly can. But you need to know that. And in putting your thoughts down on paper, you're learning your company. You're learning what your customer wants. You're learning who and we'll talk about this later. You're going to learn who your target customer is, where they live, what they listen to. If you want to take it real far, how to get inside their head with your advertising. And we can talk about that anytime you want to. If you can't write sentences, take these different topics and write bullet points. Just write down bullet points. Everybody's got a thought. Well, I want to do this, this, and this on my menu. Okay, fine. That's a bullet point. I want to have 3 employees. That's a bullet point. Write down bullet points. We can always put words and put them in the right categories later. Okay.
So for those who are joining online, let me make sure that this is working. All right, so we have 2 QR codes and links for you guys. The first one on the left is just a really quick 2-minute survey that helps us internally just know how we did, what we could do better. The second one on the right is the registration link for the 102 class. If you would like to join us, it's March 2nd and it will be 2:30 to 4 p.m. And again, we are going to be going a little bit deeper and continuing on the business training. And again, I just would like to thank Harold for joining us today. He always does an awesome job. And keep in mind, as he said, he is always available, and the SBDC as a whole is always available as a resource for those who need help in any area of business, not just business, not just developing a business plan. So always just keep that in mind. And with that, that will conclude our class today. Just a short reminder, I will be sending the recording and the other resources that Harold went over today and mentioned probably Monday. So plan to receive that. So thanks everyone for joining us today and have a great day.